Welcome to Podcast 83, a regular look at the news, stories, and trends related to Michigan's 83 counties from the Michigan Association of Counties.
Good afternoon, everyone. Welcome to Podcast 83, the podcast put on by the Michigan Association of Counties. My name is Stephan Currie, the Executive Director of MAC, and today we are joined by Tony Licavoli from Rehmann. Rehmann is a premier partner of MAC, been a premier partner for a few years now, a great partner of ours. And today we're going to talk a little bit about an area that probably most people don't think Rehmann deals with. They think of accounting, HR support, a variety of areas where Rehmann supports counties. But today we're going to talk a little bit about some clean energy credits and how counties can take advantage of those. But first, Tony, why don't you give us a little, what's your title, background on yourself, and we'll start there.
Sure. So I'm a partner out of our Detroit office, and I actually lead our tax consulting practice and our energy tax credit team, which typically in my role wouldn't have me interacting too much with government institutions and entities in a podcast like this. But with the passage and some of these very valuable energy tax credits that are out there that can really benefit all types of entities, not just, traditionally what would have been businesses in the past. So our government and our nonprofit entities, we've been working with all different types of organizations to really help them take advantage of these credits.
So let's get right into it, Tony. What are these credits? Who are they coming from? Who can take advantage of them? Let's start there.
Sure. So just some background on how these came about. So part of a 2022 bill called the Inflation Reduction Act, or IRA, included in that were the energy credits. Now, energy credits had always been around in some type of form prior to that. But what the IRA did was basically they created some new energy credits, but they enhanced many of the other ones that already existed. And the most significant enhancement, at least for this group today, would be the ability for something called direct pay or elective pay. And what direct pay does, it allows traditionally non-tax paying entities to benefit from these tax credits, from these energy tax credits. So a Michigan county or a local government can basically file a tax return, which typically they wouldn't do, and receive those credits in the form of a refundable tax credit. So essentially you receive a check instead of using that to offset a tax liability, which wouldn't exist.
Interesting. So, yeah, because a or a public entity typically isn't paying taxes. So in this case, they would need to, is there a special application or things like that they need to, and who are they filing with? Is this a state tax credit? Is this a federal tax credit? Who is the tax credit coming from?
Yeah, so it's a federal tax credit, and it does require the filing of a tax return. So that would be mostly a new concept for a government entity, which would typically wouldn't be filing that. What they basically did is they kind of took an existing form that nonprofits file, a 990T, and basically added on to that to allow for a government entity as well as the nonprofits to actually claim the tax credit.
And what are they applying for? What is the clean energy component of this?
Yeah. So I think we'll start maybe about what's a qualified project. And, I think one of the major misconceptions that we come across on some of these conversations is that these credits are only for like large scale projects. So you think of like utility type scale. But the ones that we work with the majority of the time are what we call smaller scale projects. And these are typically the projects that we're working with governmental entities. So, if you think of a technology like solar, you've got your large scale solar fields out there where you may have thousands of solar panels over, acres of land. And that's a utility scale project where you're basically generating electricity to sell that electricity. But on the smaller scale side, and the ones that we deal with the most, it could be something as simple as installing solar on a county building rooftop or in a parking lot, doing something like covered parking and putting solar panels on top of that. So, the opportunities out there exist for all different scales and scopes of projects out there. It's not just for a larger scale project. So that's the solar side. What we've also seen with counties is areas like geothermal HVAC. So basically you're pumping in water or some type of fluid down into the ground, or up from the ground to basically heat or cool a large facility or building. That's pretty common. Also, EV charging stations, installing those in the parking lots is something that we see quite often. And then also the EV vehicles themselves, so the electric vehicles themselves are eligible for credits too.
Interesting. So when we're looking at what sort of credit they may be getting back for these projects, is it a percentage of what the project cost? How is that determined?
Yeah, so how these work is there is a base amount of a credit and bonus amounts as well. So if you take a look at the base amounts, there is, and we're talking about in this case, let's say a solar panel installation. So for your small scale projects that are under 1 megawatt of electricity being generated, you start off at that base amount of at 30%. So it's a fixed base amount if you're under 1 megawatt. And that's typically what we see with a county or a local type installation. It's going to be under that 1 megawatt threshold. So if you're under that threshold, you start off at 30%. If you're over that threshold, you start off at 6%, and you have the ability to get up to 30% if you meet certain prevailing wage and apprenticeship requirements. So that's the PWA requirements. So, the one thing with those requirements is, many government entities are familiar with the prevailing wage aspect because they require it on their contracts. But the apprenticeship stuff may be new. And the one thing just to point about on these rules is they require some pretty substantial documentation requirements that you really need to look at the primary contractor. You need to look at all the subcontractors and make sure they're meeting those prevailing wage and those apprenticeship requirements there. So it's important to, if you are over that 1 megawatt threshold for your project, it's important to address those items right off the bat, even before signing contracts, because you want to make sure you're going to get that information turned over when the project's complete, or hopefully during the project, so that you can claim that higher credit amount.
So for these projects, is there a certain amount of look back time that counties could get? Like, is it in the past 1 year, 3 years, or is it only going forward at this point? Can you talk a little bit about that?
Sure. So these will follow whatever the tax return filing deadlines, which again is a pretty new concept for government entities. So basically you can claim the credit assuming that the tax return isn't past due. You can't go back if the return would have been due. So for, let's say it's a 2024, you placed energy property, let's say solar installations in service in 2024. Well, the initial due date for a 99DT, the form that you claim the credit on, isn't until May 15th of 2025. So you get, up until that point, and you can file an extension as well, and to make that due later in the year. So as long as you don't miss that initial due date, or you extend and you don't miss that due date after that, you can still go back and claim the credits. The one area which becomes more difficult is, we talked about the base amounts and having that documentation if you're over 1 megawatt. There's also certain bonus amounts like domestic content where you can get up and above 30%, low income community, these bonus categories that are out there that you really need to address ahead of time to make sure that you get that information turned over to you. But you can still go after the base credit amount as long as that tax return isn't past due.
Yeah, so we're really looking at projects that occurred during 2024 at this point.
Yeah.
And, depending
Correct.
on what boxes you checked will determine the amounts of credit you can actually get back.
Yeah.
Let's talk a little bit about, when we're looking at these projects, I think a lot of counties are coming, we're coming out of the ARPA time when a lot of public entities got those funds. What if they used ARPA funds for these projects? Would they still be eligible for the tax credit?
So it depends on to what extent that the ARPA funds used to fund whatever the energy project was. So what the energy credit rule state is, you cannot basically there's a limitation on a double benefit, right? If you've got something fully funded and paid for, you cannot then take a tax credit on that. But how they define that is it has to be for the specific purpose of acquiring energy property. So if you got a grant that says you will use this grant or this funding to acquire 10 charging stations, well, then you can't go then take the energy tax credit on that. But if the grant or the funding was more generic in terms of, hey, you can use this for, anything you want or any type of green initiatives or something like that, then you can. Now, the one thing with the federal funding that gets in the way is that it's not necessarily a tax rule, but there are rules with federal funding and the ability to then claim tax credits on that will prevent you from doing that. So it's not an IRS rule or a Treasury rule. It's the rules that are specific to whatever that federal grant program is that could limit you.
And then, at this point, that we talked a little bit about, it's 2024. Is there, obviously, and I want to talk a little bit about variability in Washington and credits and
Sure.
things like that. But first, right now, what does it look like? How long will counties be eligible for these tax credits going forward, do we think?
Yeah, so these go well into, at least in the current form of the law, well into 2030. So there is a long window for these energy credits that are going to exist for a long time, assuming that nothing changes in Washington.
Yeah, so let's talk a little bit about that. I mean, has there been talk about eliminating these sort of credits in Washington at this point? Is that on one of the list of things that could be on the chopping block?
Yeah, so there has been some discussion. So I guess, obviously the short answer is we don't know, but we are optimistic that at least a lot of the tax incentives related to the energy credits will stay in place. So there was a study that came out, I want to say maybe a month or so ago, that stated that somewhere around, I can't remember if it was 70 or 80% of the private sector investments in clean energy is coming from Republican congressional districts. So, and actually based off that study, a group of Republican lawmakers actually wrote to the House committee that's drafting the tax legislation, basically asking them to protect some of these credits. So we're optimistic that there is at least a base in Washington that's supportive of some of these specific credits. Now, where we think they're going to go after these is maybe on the grants or the funding side, which again isn't necessarily connected to the tax credit side, and also maybe target some specific energy credits like electric vehicles, which they mentioned are one of the areas that they want to look at. So what we do know is they are proposing new tax legislation, and because of the Senate rules, they have to find a way to pay for this tax legislation. And so they are going to be looking, especially over the next month or so, I think we'll find out a lot more information, but they are going to be looking to raise revenue some way or cut revenue in some way, cut expenses some way. And so we don't know, but I think we're optimistic that at least some of the larger credits will stick around for a while.
Yeah, some good information there. And then finally, what sort of time frame is the turnaround time, or are you experiencing for your clients in applying for the credit and getting the credit?
Yeah. So, and just to clarify, when we say applying, because there is an application portion of this that's related to some of the bonuses, but the returns itself aren't an application for the credit. They are, you are entitled to that, assuming there's no, upon an IRS audit or something like that. So the turnaround time that we're seeing is, we started filing these mostly in October and November of last year, because that was the extended due date of the first year of the IRA credits. So we started to see some of those counties, some of those government institutions, agencies getting credits back over the past 3 or 4 weeks. So not all of them have, and it depends on when you filed and how you filed, but we have seen the refunds start to come in over the past month.
Wow, so relatively quick turnaround time, so that's good to know.
Yeah, yep.
Tony, is there anything else we didn't touch on that you maybe want to highlight?
No, I would just say the important thing here is if you are considering some type of energy project, it's just getting out in front of it, because these, you're talking about 30, 40%, sometimes even 50% being funded through tax credits. So that's a huge portion that you can utilize to fund that. So if you get out in front of it, if you're bringing in some type of advisor to help make sure that contracts are written correctly and that the language in there is correct and that you're protecting yourself in case of some event where a contractor doesn't meet an obligation that could impact the credit. So just making sure that you're getting out in front of it and addressing those concerns as soon as possible before you get into the point of signing a contract.
I have some good information there. Yeah, so if anyone has any questions, they can go to micounties.org, reach out to one of our staff. We can get you in contact with someone at Rehmann. There's Rehmann contact information on our website as well. So Tony, thank you for your time today. Appreciate it. Some great information.
Thanks for having me.
All right. Thanks, everyone. We'll talk soon.
Thank you for listening to today's episode of Podcast 83.